There's a financial double standard that's impossible to ignore, but one that nearly everyone simply accepts, or probably is in favor of. And the real question is this: how can governments waste money the way they do? Now, if we start simple, individuals and companies have to balance their budgets over time. That is something that is simply non-negotiable. If you've got a paycheck, if you've got bills, you need more coming in than that's going out, at least eventually. Same with a business. Profit matters. Cash flow matters. Debt serviceability matters. But yet seemingly governments don't seem to play by those rules. And that's where we're running into a really big problem. My name is Richard and welcome to Ronc Industries, the industry blog for investors where we're pro-wealth, pro-growth and pro-industry. And today in industry, we're going to take a high-level overview at taxation, both what it is and the real reasons why so many people simply loathe it. From the very start, it has to be said that taxation is a deep and complicated and contentious subject. And since this is one rabbit hole that I can't imagine most people wanting to go down, we're going to keep things moving, and we're going to keep a very numbers heavy, extremely mind-numbing topic moving forward. So here we go. Individuals can't indefinitely spend more than they earn. Eventually someone says enough, whether that's a bank, a lender, credit card company. That constraint exists for everyone, seemingly except for governments. Governments routinely spend more than they collect through deficit spending. And this isn't about servicing debt responsibly, it's just overspending. Rampant overspending. It's about waste. When we talk about it normally, we mean excess. We're talking about errors as well as negligence and what could even potentially be fraud. But governments seem to operate under a completely different playbook that you or I would never be able to play by. So let's put some numbers on this. The United States and Australia side by side for some context. From financial year 2021 through to 2024, the United States spent $28.31 trillion. It collected $19.86 trillion in revenue. Now that's a net deficit of $8.45 trillion in just 4 years. Australia, over roughly the same period, spent $4.568 trillion and collected $4.436 trillion, which is a net deficit of $142 billion. Now, it's not small, but here's how they really compare. If we spread that debt out across the population, in the USA, that's around about $24,000 USD per person, or around about $34,129 Australian per person. In Australia, our debt is around about $5,100 per person. That's the bill per individual. Now, in the financial year 2023-24, Australia actually ran at a slight surplus. The US in 2024 alone ran a deficit of $1.88 trillion in 1 year. Now, by some numbers, that debt alone is the same as Australia's GDP of the same year. So what do we actually see here? Now, aside from the double standard, individuals need to earn more and spend less. Companies have to compete, they have to innovate, they have to cut costs. Governments rarely cut budgets in any meaningful way. They look for ways to spend more, and lately, they're getting very creative about it. Now, what we have to understand is government money comes from taxation. It comes from income tax, it comes from company tax, sales tax, GST, VAT, as well as excises and tariffs, as well as levies. Tax is the primary revenue source for a government. Even tax havens collect money. Monaco, United Arab Emirates, or even some of the Gulf states. Low tax jurisdictions like Oman or Thailand, they just collect tax differently. Now, nothing that a government provides is free, ever, full stop. If something exists, someone paid for it. Printing money doesn't remove the cost. It simply hides it, at least for a while. Now, taxation is compulsory collective funding. Everybody contributes, both individuals as well as companies. even foreigners spending money domestically will contribute to it. Now, tax funds everything that you're not willing or able to do yourself. Now, we're talking about things such as healthcare, education, roads, defense, sanitation, public infrastructure. The list is endless and it goes on. So think of taxation like a compulsory account. Money gets siphoned off, but you don't control it. The government does. Now, that framing in this case really matters. Now, full disclosure, this video uses data from October 2025 when the original article on roncindustries.com was published. So in the financial year to date 2025, the US collected around about $2.66 trillion in revenue. Now, 50.74% came from individual income taxes, 33.4% came from Social Security and Medicare taxes, 8.64% came from corporate income tax, and the rest came from excises, customs, duties, and tariffs. Individuals in this case really did carry the load. Now that's important because we're going to look at that closer later. Whereas, let's look at the simple Australian example. Now, none of this is advice, it's just math. In this case, the company gross revenue of $22 million. Now, GST at 10%, $2 million of that is straight away tax. Now, with payroll tax in this example at 4.75% and capital gains at 25% on profits, the company's net margin ends up at around about 14.7%. Now, the government's effective take exceeds that at 15.3%. So the government extracts more value than the business that actually creates it in the first place. So now, if we increase the gross margin from 20 to 30%, the government's revenue increases by another 2.5%. The government wins when profits rise, always. Now let's add employees. Each employee earns $100,000 pre-tax, which lines up roughly with the average salary in Australia. So roughly $21,000 per employee goes straight into income tax. Across 15 staff, that's about $315,000 in personal income tax collected directly from the company payroll. Now, the tax collected is roughly now around about $3.37 to $3.87 million, depending on the scenario. Now, that's about 16.8 to 19.3% of the total revenue, before employees get to spend a single dollar, which then gets taxed again. Now, this part is extremely important because governments are meant to represent their citizenry. Government revenue is your money, although you're not the one who's in control of it. Now, this isn't an abstract and it's not mythical. Waste isn't government waste, it's personal financial harm. Every dollar that is wasted is a dollar that you didn't get to use. It's the same logic as personal debt. Now, in the financial year 2025, the United States allocated 14% of its budget just to net interest. That's around about $970 billion. Now, Australia's entire federal budget for financial year 23-24 was $953 billion. So the US spends more on interest than Australia spends on everything, and that's even before the currency exchange. And paying interest doesn't reduce the debt, it just stops it from exploding even faster. Now, taxation itself isn't actually the core problem. Unrestrained spending is. Monaco has no personal income tax on its citizens, yet its budget is in surplus, and it's debt-free. High-tax countries can work, such as Sweden. Low-tax countries can and do work. Wasteful systems, however, don't seem to be doing that well. Now, this is where things get ugly, and also where people really start to get animated about how they feel about taxes. Disability and other benefits spending grew at a compound annual growth rate of 40% and 37% in Australia, respectively. Disability spending alone went from $5.4 billion to $41.5 billion in just 6 years. Now, with 769,000 participants, implied support rose from $7,000 to $54,000 per person. That's not a rounding error. That's systematic failure. Now, this isn't about cutting support. It's about asking who's charging what and also who's charging why. Systems without accountability invite exploitation. So in this case, trust is the real currency. Some countries pay high taxes and the citizenry is fine with it because they trust how it's used. Waste destroys legitimacy. Unchecked spending destroys confidence and exposes the very people who fund the spending to even larger problems in efforts to handle the problem from the very people who made it in the first place. But something that we can all relate to is once trust breaks, the relationship fails. Those who respect money are respected. Those who don't shouldn't be trusted with yours. Ask yourself, have you ever knowingly given money, and we're talking about financial resource here, to someone who you knew was going to waste it or knowingly be negligent with it? The answer for most people, I would hope, is a solid hard no, even when it's the government. But taxation is the system where the choice of saying no is removed, and the relationship for many, many people has already failed. The problem is we're all going to be the ones paying for it in the end. Now let me know what you think. That's all for today. I'll see you in the next video.